we've been selling for years, and I continue to sell. We have so much stock, and we have a lot of clients that really believe in the Tesla story, and we've kept some stock, obviously, in our portfolios. But in my ETF, I'm out of Tesla completely, out of my GK ETF, and it's mostly because the business is declining, and these earnings results continue to show that the business continues to decline, and in some kind of troubling ways. So as much as the previous guest is bullish on many of these things that Elon talks about, nobody wants to talk about the truth that nobody wants to buy Elon's products. Like, until that gets addressed, there's a huge elephant in the room that nobody seems to want to point at, because it's Elon. And so he's the innovator behind all of the things that are great about Tesla, but he's also the sort of villain that's created so much animosity around him that nobody wants to buy his products.
We've got a great cover story by the team of Max Chafkin and Ed Ludlow in Bloomberg Business Week, the new issue coming out, the August issue. It'll soon be on newsstands. It's already on the Bloomberg. But, the whole idea, Ross, as you know, since you understand this guy, this company so well, you never kind of count Elon out. And so I do wonder, if he does get it right, if he maybe, I don't know, we'll see what happens in terms of his involvement in politics, because it does seem like he still wants to stay, according to the SpaceX filing. But I mean, there is always that caveat when it comes to Elon, right? That he sometimes pulls it out, or he often pulls it out.
Yeah, and I think that's been true in the past, and I'm very grateful that he pulled it out 5 years ago when it really mattered, and Tesla was almost on the verge of bankruptcy, and it has become a very successful company. But it doesn't mean he's going to do it again. And this idea that, these kind of entrepreneur, rock star people don't fall is actually is not true. In fact, it's very common to what we call the rise and fall story. That's all the stories you see on Netflix and the documentaries. So, this might be a rise and fall story, and things don't rise forever, per se. And I always remind people, I don't think most people even know who invented the television, but the television was invented in the United States by a company called RCA, which was like the hottest stock of the 50s. Mm-hmm. Well, how many TVs are made in the United States today? And the answer is zero. So the very same thing could happen in the EV business. But that said, Elon can fix the company. It's solely broken because of him. He can certainly fix the company if he wants to do what's necessary to improve his image. And in a year, people forget, and Tesla might be back. But he just doesn't seem to care about fixing his image, and he doesn't seem to be in understanding the responsibility goes to him on why sales are down so much.
So why even have any Tesla stock right now?
I think the reason I hold personally still some Tesla stock is for the same hope that we all have, that they are definitely focused on a future, and especially for me, a climate activist. It's a green future that I'm pushing, and Tesla still is the leader in green, transportation and energy, and I think it's an incredibly important company to succeed. Hence why I'm out here banging on Elon all the time. It's not, for any other reason than wanting to see Tesla succeed, because it's crucially important to climate change. But this Robotaxi business is not crucially important to anybody. So, I think Tesla's main business is selling EVs and energy storage, and they should be focused on repairing that main business. And I think their other future endeavors are interesting, and that's why it's a reason to hold the stock. But it also trades at 150 times earnings that are going down.
Okay.
And so, you have to weigh that too.
In the past, you've talked about how nice it is to drive a Rivian, for example. Are you willing to now invest in any other EV company that you've turned on Tesla?
No, I've lost a lot of money in EV businesses over the last 5 years that I've hoped would succeed, including Rivian and many others. And unfortunately, many of the EV operators are now having all the incentives taken away from them, as well as traditional car companies, along with tariffs and everything else. It's just really a horrible setup to be a car company. The car company we own is Ferrari, actually, which has no problem selling their cars at 40% margins that make Tesla look like chump change. So, truthfully, it's just a tough to be in a global auto business on a great day, let alone with Trump as president. So it's a very tough time for the businesses, and I'm just not recommending that right now versus a stock like Trane Technology that makes, clean energy air conditioning units where the demand for air conditioning is off the charts. And that's been a wonderful green energy investment, along with GE Vernova,
Right.
which we also own. That's been a wonderful green energy investment, but it's not EVs.
Hey, listen, I do want to go back to, we've got the Tesla Live blog going on and just tracking everything that's coming out of the earnings. Ardana Hull, who covers Tesla and Elon, says page 12 of the shareholder deck shows the Tesla ecosystem, which includes Optimus, we know the robot, pushing a baby stroller. Ross, when it comes to Tesla and the world of Elon, there are so many different moving parts. There's, the shining beacon of SpaceX, right? That's a really great business. There's all the AI stuff that's going on. There's so many different moving pieces. What else do you want to know, maybe on the call today, about, from the Elon universe?
Well, I think the most important thing in my mind that has the biggest opportunity to help Tesla is this low-cost vehicle they keep talking about. They have so much excess capacity in their factories now because they're not selling more cars that they need a new vehicle. And also for addressing other markets, whether it be India, China, and Europe, you need a small vehicle that's inexpensive to compete against the other EV players and regular traditional car companies. And they need to do this now. And the sooner they do this, the better. And that's the most important thing. I know we like to talk about the day a robot is pushing my kid around in a stroller, but that day is long in the tooth from coming, nor does anybody in the world would trust some big robot made by Elon Musk.
Yeah,
so I think we need to get out of that fantasy.
So should we expect more departures, Steve?
Well, I think we may. Look, it was another tough quarter for Tesla. Unit sales down 14% year over year. Q2 revenues coming in, we think at about $23.5 billion. That's down 8% year over year. On track for $97 billion in total revenues. So what you have here is flat growth. And when Tesla is hyping itself as a hot tech company, which I think it is, it's hard to sell the flat growth story. So they need to keep top executives in place. They need to get new product to market. That's the challenge for Tesla. We'll see if they can do it.
They need to get new product to market, and it's not happening, certainly when it comes to the auto business, which very much still drives its top line. Do they have the talent in place to do that right now, Steve?
Well, I think they have the talent, but they do need more stability. You just can't have this many of the top executives going out the door. And I think to the extent Tesla can play down the drama and focus more on executing, it'll win. I think they need to do four relatively simple things. First, they need the new $25,000 model that can compete with the lower cost Chinese and also legacy makers like Volkswagen and Hyundai. They've got to get regulatory approval for the Robotaxi in Austin and San Francisco. They need that ASAP. They need to rebrand it, less drama, less politics, more new products, lower prices. And then, and this is an important part of it that sometimes gets lost, they need geographic expansion. They've got to launch in emerging markets. And they finally launched in India, but to do well there, you need to do what BYD and Volkswagen and others have learned to do, is show up with that $20,000 to $25,000 vehicle that people in Vietnam, India, South America can buy. If they can execute on any of those four things, their prospects are going to look a lot brighter. But now they need less drama, more execution.
Right. Instead, we get a lot of focus on the Robotaxi and the humanoid robot as well. There's also a new focus on the Bitcoin holdings of the company, too. In the second quarter, Bitcoin actually rose in price, so that should be a net positive for the company. How much credit will investors give to Tesla on that Bitcoin angle?
That is such a new one. Who's to say? Bitcoin's real, it's the future, but it's still, are you investing in an auto company or a speculator? And I think that's going to be a hard one for people to get their arms around. At the end of the day, I think investors are going to be looking at, is this auto company providing growth for the future? Are they providing increased profitability or lower profitability? And are they at the front of the pack for bringing new models to market, cutting costs, providing better features, longer ranges? They were at the top of every category in 2021, 22, and 23 with the Model 3 and the Model Y. They need the next generation of new product with a wow factor to get back to where they were. We'll see if they can do it.
Steve, what makes you think there's any kind of premium on stability, whether it be at the board level or in the executive C-suite? I mean, we've had people like Kimball Musk on the board for decades. James Murdoch is on the board, for example. It's essentially a board that's kind of locked in. The only new board member is John Hartung. And as for executives, I mean, does it really matter? It's Elon Musk who calls the shots at the end of the day.
Well, look, big companies like Tesla are more than one person, but it just doesn't help that they've had so many of the top people, especially highly respected folks like Drew Baglino, leaving. That shakes up investors, and that's part of why Tesla's lost 20%. They would benefit by having stability in the top ranks. I don't know anybody that disagrees with that, but they have a lot of talented people. They own a lot of things that many people don't understand. They essentially own the North American charging network. That's a coup. That's going to give them a profitability buffer. They were a leader of auto companies any place in the world to develop a robust energy division that's not only selling power walls for car users, but is selling $1.5 million gigapacks that they're selling to utilities around the world by the thousands. That's sort of the hidden hero in their revenue story. So they've had a few misses, but they've got a lot of insurance policies, including their bets on Bitcoin. But at the end of the day, the whole world is going electric. Tesla and every legacy automaker needs a $20,000 vehicle in the developing world and a $25,000 vehicle in the European and North American markets to win. And everybody's waiting to see whether Tesla's going to roll one out or not.
Tesla was once the undisputed leader in the EV revolution, a symbol of innovation and climate progress. But now serious questions are being asked, not just about growth, but about leadership, image, and direction. I've held Tesla stock for years. We've believed in the story, the mission, and yes, in Elon. But now in my ETF, Tesla is gone. And that decision didn't come lightly. It came because the business is clearly declining, and recent earnings just confirm that. The uncomfortable truth? Elon Musk is becoming a liability to the brand. His public image, political rants, and constant distractions are pushing potential customers away. He's the same visionary who saved Tesla years ago, but he's also the reason people hesitate to buy the products today. When your CEO becomes the biggest obstacle to your company's growth, that's not a branding issue, that's a business problem. I still personally hold a small Tesla position, not out of optimism for the short term, but out of hope. Because as a climate-focused investor, I want Tesla to win. It still leads in electric vehicles and energy storage. But when earnings are falling and the stock trades at over 150 times earnings, you gotta ask yourself, is this still a rational investment? And this isn't just about sentiment. The numbers are right there. Unit sales down 14% year over year. Revenue down 8%. Full-year growth? Flat. That's not what you expect from a company that positions itself as a high-tech growth stock. So what needs to happen? 4 things, and they're not rocket science. 1. A $25,000 vehicle that can compete globally, especially against Chinese and legacy automakers. 2. Regulatory approval for Robotaxi services in places like Austin and San Francisco. 3. Less drama, less politics. Just build cars people want to buy. And 4. Real expansion in developing markets like India and Latin America. Tesla still has key advantages. The supercharger network is now the backbone of EV infrastructure in North America. The energy division, selling power walls and massive battery systems to utilities, is quietly becoming a major profit center. But none of that matters if the company doesn't get its act together. Leadership instability, public controversies, and the lack of a clear product roadmap are real issues. High-profile executives are leaving. Investors are spooked. And while Elon may still be the face of the company, he's also its biggest risk. Can he turn it around? Sure, he's done it before. But the rockstar entrepreneur who always bounces back story has its limits. Markets are less forgiving now. Attention spans are shorter. Competition is stronger. And if Tesla doesn't fix its core, the cars, the pricing, the delivery, then all the Robotaxi demos and Bitcoin holdings in the world won't matter. This is still a company that can lead the green energy future. But leadership has to match that ambition. Otherwise, Tesla could end up as just another story of how brilliance